Hello traders, and welcome to yet another video. I took this trade this morning. Let me just try to break it down as fast as possible without wasting much time. So I'm on the 4-hour time frame, and what I could see was that price was currently pushing up into this bearish order block right there. So price was pushing into it pretty correctively, and if we zoom in, you will see that price failed to close above this huge bullish candle. It only left a week right there, and then it created, so this type of candlestick shows indecision. You have almost equal wicks at the top and at the bottom. They're almost equal. This was that price is in a consolidation phase, and at the same time it has swept this high, and it is inside a bearish order block after a huge candlestick drop. You see that bearish candlestick is actually huge, and at the same time we have this opposing order block, right? But where is price most likely to go? Based on all the confluence, we might see a higher probability of price going lower, but I'm keeping my mind open. I'm just going to take the structure as it comes. I'm not going to put expectations, as you guys already know. So I'm going to go down to the 15-minute time frame. So now that we're on the 15-minute time frame, I'm already seeing my targets for sales. Right now, if we look at the left side, looking at the left side, I can see this order block that created a break of structure. This order block created a break of structure. Let me indicate it for you guys. Break of structure there, meaning that it actually has good momentum, and at the same time we have a fair value gap. That's right there. Alright, so now the trade is looking pretty bullish, right? Because we have many points where price could reverse. We could reverse at this bullish order block. We could reverse at this fair value gap. But at the same time, when I did my higher time frame analysis, I was favoring sales. So what I waiting for price to give me some pointers to tell me what it wants to do, and then I followed that, but also keeping wary, but also looking out for these levels if price is going to reverse off of it. So if I was going to take a sell, these would be my targets. If I was going to buy, I'd buy from these levels, right? So I then went lower to the 1-minute time frame. You know, guys, that's my entry time frame. And let's see the price action that was unfolding there. Price is pushing down currently. So let's see what happens, and I'll show you where I got my entry, guys. Okay, so now we are in that fair value gap. Let's see what happens. Right now, things got interesting at this point. Let me delete this level so that you can see clearly. Okay, so first of all, what we can see is that price created this low, and it went below it, right? But left only wicks rejection. Or is it a sweep of liquidity? Then we look higher. Price created this bullish engulfing candlestick, pushing higher, but slightly closing above it, right? So to some smart money concept traders, it would have been the buy signal, waiting for price to pull back and buy from there. But there was no creation of a fair value gap. Price didn't create a fair value gap, but it created an order block, right? Let me indicate that order block. This order block that also had a breaker structure at the top right there. But is it valid? Not really. It just has been invalidated by this candlestick, how it approached. You can see that after price swept this high, leaving a week up there, right? It came to this order block, to this one. That's my order block for me. The reason why I say that order block is important because after it pushed price low, it created a break of structure, right? Breaking below this low, right? Then even going lower, and then after that, price created this low and swept it, didn't close below it, and then pushed up aggressively, right? This looks like inducement, right? Telling traders, yo, I'm about to go up, and early buyers would have entered right there or placed their orders at this order block. The stop loss are now crowded down at the bottom there. So price came to the order block, touched it, left a wick, then pushed down pretty aggressively. That is your entry right there, showing that it has rejected any possibility, any probability of pushing up, because it went up, didn't close above there, right? It just slightly closed, but then touched the order block and then pushed down with strength. That is a sign that sellers are still in control. So how do you place your entry? You wait for the price to come back to 50% of that, of this bearish candlestick. It's almost like right there. Boom. Stop loss above there, and then take profit. We're obviously targeting this level, because this was the order block that I was showing you guys earlier. Boom. And let's see how price played out. And the order was filled. Take profit was hit, and we immediately got out of the trade. And that is it. Let me show you proof that I entered the trade. Boom. So this was when I was still in the trade waiting for TP to get hit. And this was the point when TP was about to get hit, and I had placed my stop loss at break even at this point. Thank you guys for watching. See you in another video. Make sure you like and subscribe for more content like this one.